In this video, we're talking about the average cost method for costing inventory. Remember that there are four major inventory cost methods. We are referring to the average cost method in this video. Average cost can also be referred to as the weighted average cost method. The average cost method, again, sometimes called the weighted average method, is based on the average cost of inventory during the period. The formulas we will use are listed on the slide. The formulas are: average cost per unit is the cost of goods available for sale divided by the number of units available. Ending inventory is average cost per unit times the number of units in ending inventory. Cost of goods sold equals the average cost per unit times the number of units sold. Now let's go through an example using the average cost method. In May, Shade Company had a beginning inventory of 30 pairs of sunglasses that cost $10 each for a total cost of $300. During the month, Shade purchased another 20 pairs at a cost of $15 each for a total cost of $300. At the end of the month, Shade had 10 pairs of sunglasses left in ending inventory, having sold 40 pairs during the month. Calculate Shade's cost of ending inventory and its cost of goods sold for May. Let's just make note of the key information that we will be using. First, note that the beginning inventory of 30 pairs of sunglasses that cost $10 each for a total cost of $300. Next, we see the purchases are $300, which is 20 pairs at a cost of $15 each. Ending inventory consisted of 10 pairs of sunglasses. We don't know the cost of that ending inventory. That is why we have to go through the calculations. Also note that 40 pairs of sunglasses were sold during the month. Let's get into the calculations for our average cost example. Beginning inventory is $300, or 30 units times $10. We will add purchases. Purchases are $300, which was 20 units at $15 each. Once we add beginning inventory plus purchases, we get cost of goods available, which is $600. We also know there were 50 units available, which was 30 units in beginning inventory plus 20 units purchased. Okay, now we can subtract ending inventory. But before we can do that, we need to calculate the average cost per unit. The average cost per unit is the cost of goods available for sale divided by the number of units available. Here we will have $600 divided by 50 units to give us an average cost per unit of $12. So let's go back up to ending inventory then. Ending inventory has 10 units in it. We will multiply that by the $12 per unit average cost to get $120 as our cost of ending inventory. We can calculate cost of goods sold two ways. One is to take the cost of goods available of $600 and subtract ending inventory of $120 to arrive at cost of goods sold. We can also take the 40 units that were sold and multiply by the $12 average cost to get the $480. So that concludes our example of the average cost method. This video was created and narrated by Dr. Sell-Tietz. Have a great day.